What exactly is an Islamic bank? Let's talk about first what a bank is. Well, a bank is a mediator between those who need money and those who have excess money. So it mediates money from savers to spenders so that spenders can build in relatively short amount of time, which otherwise would have taken years to save up. And savers can actually earn a return on their money, which otherwise would have sat idle and lost its value. And the business model for the bank for doing all of this is by paying interest to those who give money, that is the savers, and taking interest from those who use that money. So that's how a bank operates, by using interest on both sides of the coin. By this definition, the term Islamic bank almost seems paradoxical because Islam, of course, prohibits interest. So how does an Islamic bank function as a bank in the first place? How does Islamic bank fulfill the criteria of mediating between savers and spenders? Well, what it does is it replaces the element of interest with two things. The first is a profit and loss sharing mechanism. The second is charging a fixed fee for taking risk for providing a product or service of value, which is not a function of the time horizon it took to deliver those products and services, whereas interest is purely a function of time. So that is what differentiates Islamic bank from a conventional bank. Islamic bank is more concerned with the creation of real sustainable value and a distribution of rewards to all those who created that value in an equitable proportion. Hence the concept of risk sharing and not risk shifting. Some of the main products, Islamic financial products that an Islamic bank can offer is musharaka, mudaraba, ijara, istisna, salam, murabaha, etc. I'll explain in short what each of these terms means. Musharaka is basically when a group of people come together and invest their money, invest their time, invest their own human effort. Someone can invest by giving in money, someone can give in machinery, someone can give in land, etc., etc. And they come together to form a joint profitable business venture. And everyone has a fair proportion of profit and risk of loss. So in our case, a bank can be the one who's providing capital, but bank can also provide other services to the one it is partnering with for the sake of business, such as consulting service or maybe some other contractual services. Similarly, mudaraba is basically a form of musharaka where there is a clear demarcation of people who give money and people who put in the effort. In our case, of course, bank is the one who gives in the money and the one who takes the money is the one who puts in the effort. And then when there's a profit, bank takes a profit, of course, after securing its principal. Similarly, we have ijara, which is nothing but the Arabic term for leasing. We all lease apartments, we lease vehicles like taxi, sort of rent a car. So that is what ijara is. However, there is a small difference. In conventional leasing, what happens is when the term of the lease comes to an end, the person or the entity which has leased out an apartment, let's say, has already recovered its principal amount that it used to acquire the property, plus a good amount of markup, which acts as a profit. So usually in a conventional lease, the person who was paying the rent, the ownership is also as well transferred to the lessee, right? But in the case of Islamic, the ijara, in case of Islamic lease, what happens is the ownership always remains with the original owner, right? The one who bought the property and has leased it out. Whereas the usufruct or the right to use the product is only transferred for a temporary basis to the person who's paying the rent, right? And then we have salam, we have istisna. Istisna is basically financing for the sake of construction or manufacturing. It could be a building, it could be any product, it could be any machinery, it could be anything of any specific, any specifications. So that's what istisna is. And salam is basically the agricultural version of istisna, where a person can pay in advance to the farmer for his produce, and he can use that money for all of his agricultural activities, which otherwise he would have used to take an interest-bearing loan. Now he can just use the money and sell in advance, right? So what happens in salam is I can pay a farmer who has not yet produced the rice or the grain or whatever, and he has already sold me something which does not yet exist, which is an exception to the list of rules that is usually there in an Islamic contract. And then there is murabaha. What happens in murabaha is the bank usually buys a product and therefore assumes the risk of ownership and then sells it on a markup on credit. Now, this is very, very in resemblance to conventional financing, and therefore murabaha is a center of controversy and debate. But nevertheless, there are sufficient evidence to prove that murabaha is in fact Islamic. So these are some of the examples that of Islamic financial products. And other products like diminishing musharaka, which is used to finance home ownership, these are nothing but a combination of these essential products. It could be a combination of ijara and murabaha, it could be a combination of istisna, etc., etc. So this is basically an overview of Islamic products that an Islamic bank is supposed to offer. What you must have noticed in all of these transactions is that each transaction is linked to an event that is actually creating something valuable. It's creating a product, it's creating a business, it's providing a service. It's creating an agricultural product, it's making a building, it's something of tangible value, something of actual value is happening, and that is what is backing the transaction that an Islamic financial institution is getting into. Whereas in conventional finance, they just used to create money out of nothing but money by the magic of compound interest, therefore inflating the economy, making the whole thing less stable, and not equitably sharing the risk, right? So this is one of the things that makes Islamic finance more ethical and more sustainable. Finally, the question that I ask to myself and to all of you is that, can we, by looking at all of this, conclude that Islamic banking and finance is a more sensible, is a more sustainable form of finance and banking? Well, I think that depends on how me and you, how well we implement what in theory definitely does seem more sensible. Thank you. I'll see you in the next video.